Hello, investors. Welcome to EPK Capital's daily market debrief for Wednesday, October 8, 2025. For the past week, the S&P 500 has been on a fantastic run, setting record after record. But every marathon runner needs a breather, right? On Tuesday, October 7th, Wall Street finally took a moment to pause. After yet another all-time intraday high, the markets decided to take a step back, ending that incredible winning streak. This wasn't a moment of panic, it was more of a pivot. On this day, the sheer optimism around artificial intelligence clashed with a crucial question: what are the profits? Also, political gridlock in Washington kept pushing gold to a groundbreaking, almost unbelievable, new level. Meanwhile, in the background, the world of cryptocurrency kept steadily integrating into mainstream finance. Today, we'll dive into the three main narratives that shaped the session. First, the reality check on AI sent waves through the tech world. Second, we'll discuss the undeniable effects of Washington's dysfunction on gold's soaring price of $4,000. Lastly, we'll look at the rapid and ongoing integration of digital assets into the global financial landscape. Let's get started. Section 1. The Global Market Scoreboard: Wall Street's Reverse. The narrative of Tuesday on Wall Street was all about a classic reversal. The day kicked off with the same positive energy we saw last week. The S&P 500 pushed higher, setting a new all-time intraday record of 6,754.49. But that optimism didn't last long. By the end of the trading day, the index had given back all its gains and then some, finishing down 25.69 points, or 0.38%, closing at 6,714.59. This was the index's first down day in 8 sessions and its largest single-day decline since late September. Other major U.S. indices faced similar challenges. The Dow Jones Industrial Average dropped 91.99 points, or 0.20%, to finish at 46,602.98. The tech-heavy Nasdaq Composite, which fueled the recent rally, felt the downturn the hardest. After also hitting a new intraday high, it fell 153.30 points, or 0.7%, to close at 22,788.36. Despite the red numbers flashing on the screen, panic wasn't widespread. The CBOE Volatility Index, VIX, often called the market's fear gauge, remained relatively steady, dipping slightly to 16.33. This level is still under the historical average of 20, indicating that while traders were cashing in profits, they weren't rushing for the exits just yet. Around the world in 60 seconds. When we look beyond the US markets, the scene was more mixed and less intense. European markets ended the day mostly flat. In London, the FTSE 100 crept up just 4.44 points, or 0.05%, closing at 9,483.58. Similarly, Germany's DAX index finished almost unchanged, gaining only 7.49 points, or 0.03%, at 24,385.78. This relative calm persisted even as investors remained cautious about political developments in France, where markets were steadying after the Prime Minister's resignation. Asian markets took a softer approach, following the lead of the futures market ahead of the US Open. Japan's Nikkei 225, after an impressive rally on Monday, slipped 0.45%, closing at 47,733.20. Trading across the region was lower, as both mainland China and Hong Kong markets were closed for a public holiday. This global divergence is noteworthy. When major macroeconomic fears or geopolitical events impact the markets, a widespread sell-off is usually expected. That didn't occur this time. The fact that European indices remained steady while US markets experienced sharp intraday reversals suggests a catalyst unique to the American market. The main driver of this session was not a global risk-off event, but rather a specific story tied to the high-stakes US tech sector. Section 2. Anatomy of the Trade: the day's biggest winners and losers. On a day like Tuesday, the real action isn't in the final index number but in the individual skirmishes beneath the surface. This session marked a pivotal shift in artificial intelligence's dominant narrative. The AI narrative hits a snag. The trading mood shifted following a report that tech giant Oracle lost $100 million renting Nvidia's powerful Blackwell AI chips. This news acted like a lightning bolt, shining a light on a looming question: what's the quick return on investment for these big expenses? The report sparked a decisive ripple effect throughout the entire AI ecosystem. Companies that are the picks and shovels for the AI boom were hit the hardest. Chip-making equipment companies Lam Research, LRCX, and Applied Materials, AMAT, saw significant drops of 5.9% and 5.5%, respectively. Even Seagate Technology, STX, a data storage company that had seen gains amid high AI-driven demand, became the S&P 500's biggest loser, plummeting 7.3%. Major tech players like Alphabet and Meta faced declines in the 1% to 2% range. Pockets of strength and divergence. However, the selling wasn't indiscriminate. In a surprising show of market insight, Advanced Micro Devices, AMD, continued its impressive rally, climbing another 3.8%. This followed a monumental 24% surge on Monday, driven by a major chip supply deal with OpenAI. Similarly, IBM defied the trend, rising by 3% after announcing a key AI partnership with Anthropic. Outside the AI sector, the top performer in the S&P 500 was ad tech firm AppLovin, APP, which surged 7.6%. This was largely viewed as a relief rally following news of an SEC investigation into its data collection practices. Confidence returned after Oppenheimer analysts reiterated outperform rating, indicating the issue is short-term noise rather than a long-term threat. Automakers in the red. The automotive sector faced a tough session from company-specific challenges. Ford Motor shares plunged 6.1% after reports of a fire at a critical aluminum supplier's New York plant, raising concerns about fragile supply chains. Meanwhile, Tesla shares fell 4.5% after it introduced new, lower-priced versions of the Model 3 and Model Y. Market reactions were cool, as some analysts felt the new pricing wasn't as competitive as hoped, sparking concerns about balancing demand and profit margins. Tuesday's trading revealed a vital maturation of the AI investment thesis. The early phase of the AI boom, characterized by indiscriminate buying, appears to be over. The market is penalizing more speculative plays, like equipment makers tied to the promise of unlimited AI growth, while rewarding companies with confirmed demand. AMD and IBM thrived because their large deals with OpenAI and Anthropic were clear and tangible. This divergence signals a shift from hype-based trading to proof-based investing. Investors now want to see real contracts and analyze balance sheets. Section 3: The macro headwinds, politics, policy, and precious metals. While the AI narrative took the spotlight, strong macroeconomic forces were shaping the investment landscape. The political drama, or lack thereof, occurring in Washington is creating tangible consequences for global markets. Washington's stalemate and the data blackout. As of Tuesday, the U.S. government shutdown entered its 7th day, showing no signs of resolution. The Senate failed for the 5th time to advance funding bills from either side, and the stalemate persists. Key issues remain centered on Democratic demands to extend Affordable Care Act, ACA, subsidies set to expire soon, with Republicans refusing to negotiate until the government reopens. This deadlock is resulting in a real economic issue, a data blackout. This shutdown has delayed significant economic reports, including September's jobs report. This lack of information forces investors, and crucially, the Federal Reserve, to navigate with incomplete data. The Atlanta Fed's GDP Now model is now operating with limited inputs, making its growth estimates less reliable. Gold's glory and Fed cut fever. Amid this political uncertainty and unreliable economic data, investors are turning to a traditional safe haven. On Tuesday, gold futures soared past the historic $4,000 per ounce milestone for the first time. This powerful rally, which has seen gold gain nearly 40% this year, reflects the market's deep mistrust in political stability and fiscal discipline. This gold rally is also stoked by what's being called Fed cut fever, the belief that the Federal Reserve may keep cutting interest rates to boost the economy. This view gained strength on Tuesday when Federal Reserve Governor Stephen Miron supported more aggressive rate cuts. Typically, a government shutdown combined with lower interest rates would lead to a weaker currency. Yet intriguingly, the US dollar index, DXY, strengthened, climbing above key thresholds to 98.46. Analysts note that while the dollar weakened against safe havens, it has gained ground against other major currencies facing their own economic struggles, like the euro and yen. The simultaneous rise in both gold and the US dollar is telling. It reveals a sophisticated two-tiered strategy among global investors. They are using gold as a hedge against long-term US risks, like political dysfunction and potential currency devaluations. At the same time, they're using the US dollar as a short-term hedge against global unrest, viewing the US financial system as a safe harbor for their capital. Investors are betting against US politics by buying gold, while simultaneously placing their faith in the financial system's strength through the dollar. Section 4. The political plot twist. Just when it seemed the political deadlock in Washington was unbreakable, Tuesday introduced an unexpected twist. A voice from the hard right breaks ranks. Republican Congresswoman Marjorie Taylor Greene, a key conservative voice in the MAGA movement, indicated her willingness to negotiate with Democrats over healthcare subsidies to resolve the government shutdown. In several posts, she expressed concern over potential premium increases for her constituents if the ACA tax credits expire at year-end. "I'm not just following the party line on this," she said, stressing that her views are driven by the financial impact on American families rather than party strategy. This position runs counter to the official Republican stance, which demands a clean funding bill before any healthcare negotiations begin. Her move could bridge toward the Democratic position, which calls for a healthcare agreement before discussing reopening the government. This is a crucial development. A call for compromise from a moderate Republican might be expected and easily dismissed. However, coming from a core MAGA member like Representative Greene, it suggests that the painful effects of the shutdown could be fracturing the Republican unity. Her focus on voters' financial pain implies the political calculations may be shifting from national power struggles to urgent local issues. This signals that the shutdown's political costs might be climbing faster than GOP leaders anticipated. Should more members from conservative areas express these concerns, party leaders might face intense pressure to negotiate. Section 5. The Crypto Frontier, Institutions March On. While traditional markets and political arenas are tangled with uncertainty, the digital asset world continues its steady march toward mainstream adoption. Crypto Market Snapshot. The crypto market has shown impressive resilience amid the equity market's pullback. Bitcoin, BTC, kept consolidating near its recent all-time highs, trading between $124,000 and $126,000 throughout the day. Ethereum, ETH, also held steady, mainly trading around $4,500 to $4,700 before a slight late-day dip took it to $4,515.06. In a key shift within altcoin rankings, BNB, the token of the Binance ecosystem, surpassed XRP to claim the third-largest cryptocurrency spot by market capitalization, illustrating the ever-evolving nature of this space. The Wall Street bifurcation of crypto. First, the iShares Bitcoin ETF, IBIT, from BlackRock is on track to become the fastest ETF to reach $100 billion in assets. It's achieving this milestone in under 450 days, something the first S&P P500 ETF took over 2,000 days to accomplish, showcasing immense institutional interest in regulated Bitcoin access. Second, S&P P Global plans to launch the S&P P Digital Markets 50 Index. This groundbreaking product aims to track a diverse portfolio of 15 major cryptocurrencies and 35 crypto-linked firms. It offers credible benchmarks in the digital asset space, providing traditional managers with a tool to engage with the ecosystem. Finally, investment firm Calamos has rolled out a new line of structured alt protection Bitcoin ETFs. These innovative products intend to give investors Bitcoin exposure while ensuring defined protection against downside risks of 100%, 90%, or 80%. Such products are tailored for conservative institutions, such as pensions, which have hesitated to jump into the volatile crypto market. These are interconnected developments reflecting a strategy to create a bridge to crypto for institutions. The explosive growth of spot Bitcoin ETFs highlights a latent institutional demand. Consequently, the logical next step is sophisticated products that extend beyond mere spot exposure. S&P Global is laying down the map for portfolio managers. BlackRock is paving the way for capital flow. Firms like Calamos are setting the guardrails, making the journey safer for risk-averse institutions. This is how a brand new asset class emerges. The closing bell as we wrap up Tuesday's session, 3 essential takeaways emerge. First, the rally has taken a break. The market's week-long surge is paused, but the calm in the VIX indicates a healthy consolidation rather than the onset of a major decline. Second, the AI narrative is getting serious. The market is evolving, and the key question has shifted from, if AI will transform investments to, when and how profitable it will be. Expect more volatility as the market distinguishes the genuine contenders from the pretenders. Finally, gold has become a crucial indicator of the shutdown's impact. Its historic rise past $4,000 is a clear expression of the market's anxiety over the political deadlock in Washington. Gold pricing has now become a real-time gauge for measuring the political situation's progress. Looking ahead to today's session, all eyes will stay on Washington for any political updates. The market will specifically watch for any Republicans joining Representative Green in seeking negotiations. Given the ongoing data blackout, any Federal Reserve speeches scheduled will carry added significance as one of the few sources of insight in this uncertain landscape. That's the recap for Tuesday. The bulls took a breather, politicians kept arguing, and gold earned a new title. Trade smart, and we'll see you tomorrow.